Benchmark Protocol connects traditional financial markets to decentralized markets via the MARK token. The supply elastic and non-dilutive MARK token is an ERC20 utility token and the native asset on the Benchmark network, all of which is built on the Ethereum blockchain. Being elastic means that supply can expand or contract to meet demand, dramatically reducing price volatility. If you compare this to something like the price volatility of Bitcoin, you can see why an inelastic supply can create issues when pricing goods, services, or contracts in non-stable currencies. The MARK token also expands and contracts in a non-dilutive way. Everyone is impacted fairly, and inflation or deflation is shared across all members. Comparing this to a fiat currency, when additional notes are printed, each person's notes are diluted, meaning they decrease in value. With MARK, you will never be diluted. The MARK token is an alternative medium of exchange thanks to its unique combination of traits. So, how does Benchmark Protocol implement supply elasticity in a non-dilutive manner? The supply of tokens is increased or decreased algorithmically. Let's say we aim to achieve a value of $1.40 per token, or the SDR rate. If the price is above the SDR rate, what we call a rebase increases the total supply of tokens, reducing the price of each token. But if the price is below the SDR rate, the rebase will decrease the supply, increasing the price of each token. What's an SDR rate? This is the special drawing rights, which is an international reserve asset linked to 5 currencies. The SDR is a stable peg that moves with the entire global economy, rather than being vulnerable to the risks of tracking a single currency, such as all stable coins pegged to the US dollar alone. What does this mean for a MARK token holder? The rebase itself has no impact on total value, only on the relationship of price and supply. This process is completed entirely on-chain by the automated market maker, or in this case, Uniswap. The instant the daily rebase is complete, the token price will then be subject to supply and demand forces of the market until the next rebase. The rebase algorithm also incorporates the volatility index, also known as the market's fear indicator. If the VIX increases and more volatility is expected, the MARK token supply will also be increased. Thanks to the predictable price of the MARK token, broader use in decentralized markets is far more appealing than traditional stable coins or volatile cryptocurrencies, allowing asset managers and hedge funds with significant exposure to the larger crypto market to diversify investors' portfolios. Benchmark Protocol is the stablecoin alternative that connects traditional capital markets to DeFi.